So Bitmine is a Ethereum treasury company. So I'm sure most people here have heard of Strategy, which is Michael Saylor's company, who accumulates Bitcoin. And you probably know this better than I do, Keith, in terms of how they get more. Do you want to explain it?
Yeah, to the basics of it is that he's raising money. Michael's strategy, excuse me, Michael Saylor and MicroStrategy, which is now Strategy, is a Bitcoin treasury company. And the goal of the company is to get as much Bitcoin on its balance sheet as possible, to acquire as much Bitcoin as it can. And it does this by raising money from investors. They raise money in two different ways. They raise money in the form of debt and they raise money in the form of equity to do this. And what that means is that either I'm getting a loan from you to go out and buy Bitcoin that I'll pay interest on, or I'll raise money in the form of equity where I don't have to pay you back, but instead you're looking for the appreciation of the price of the stock that I'm selling to you to go up. So that's the basics of how Michael Saylor has done that with strategy. And now
Yes.
Bitmine is Tom Lee and some others doing this for Ethereum.
Great explanation. Thank you for that. So why Ethereum is actually probably a better asset to do this with is because of the staking mechanism that's built into it, right? So you have that huge advantage from holding a lot of ETH where you earn ETH from simply holding the underlying asset, which gives you a huge advantage to do these kinds of things that we're talking about, which is also why Tom Lee took a lot of heat for this partnership. Because if you're going to throw $200 million for a media partnership, everyone who is an investor in this is thinking, why aren't we buying $200 million worth of ETH? Right? Which is a totally fair thing to consider. And Zach has a really good point here. So, byproduct of the brain rot era. Yeah, he kind of, if you actually think about it, like obviously Mr. Beast can't be, like, it's not his fault why he did this, but he did create brain rot almost. Like the Mr. Beastification of everything, right? That's why when I was running my YouTube agency most aggressively, everyone would always want more and more and more edits, right? Because they're, oh, Mr. Beast has the most views, so signal versus noise kind of thing. Like, oh, people are watching it because of these edits. It's like, no, man, they're watching it because he spent $1 million in this production. You know what I'm saying?
Right.
If I throw more motion graphics, it is not going to give you the same amount of views, right? So, what's up, Shayla? Appreciate having you here. So, with the partnership, why I think it does make a lot of sense is because if Tom Lee and their whole thesis is that they believe that this whole world that's going on chain, and I want you to explain the tokenization stuff after this, because I think that will double it down because it's probably going to be using Ethereum as well. But if they believe that this is the future that's going to be built on, then you need usage for that thesis to come to reality. And you actually I tweeted this last night, but I should give you credit for it because you're really the one who planted the seed in my mind, where you explained how the oil companies really needed Ford, right? You're like, oil wasn't, it was a thing, of course, but like it became a thing when the car became a thing, right?
100%. That was John D. Rockefeller's thing. So quickly on that, right?
Yeah, please.
John D. Rockefeller was a billionaire right before, or rather, he was worth hundreds of millions of dollars right before the invention of the automobile. But like two-thirds of the wealth that he actually had in his life came at the very end of his life when the automobile became a thing, right?
Hmm.
So that was the thing that made him like this mega billionaire. It wasn't even until the end of it all. He was already like super rich. Don't get me wrong.
Of course. 100%, right? And so when you think about that foundational change for how really the automobile kickstarted the like crazy demand from everyone needing oil, right? Like, 'cause then the whole lives were built around the movement that came from a car. Systems, cities, structures were all built around this very thing. And so Tom Lee's whole thing, and a lot of people have been pushing the ETH narrative. They've always said it's digital oil. It's digital oil, right? And so they've really just been waiting for their car.
Mhm.
And so between what I would imagine they're building to push through this partnership and then the tokenization stuff for Wall Street that you'll explain later, I think they're screaming that like the car is here or the car is coming.
Yeah, man. I think that's a really, really good point. And so Wall Street, right, has been very all of the stuff, a lot of the news that you'll see coming out of Wall Street and tokenization and talking about blockchain, almost every single time it has something to do with some version of Ethereum,
Hmm.
right? And that's for the past 10 years that we've heard about this stuff.
Great point.
BlackRock, all the banks that have been playing and tinkering with this stuff, it's always on some version of Ethereum.
And why is that?
I mean, it's a good question. I think there's two major reasons, and Tom Lee will point this out as well. One of them, it's the oldest, longest standing smart contract platform, Tom Lee pointed out that it's never gone down per se, which is actually a really important thing to think about. When you look at other chains, I don't think any of them can say that. If you look at XRP, don't get mad. It goes down sometimes. If you look at Solana, come on, don't even
That's
try me.
they
That
call it
thing
the
goes down
cartridge,
every
right?
month.
Yeah, you gotta blow the cartridge and put it back in. That's the joke they always make for Solana. And Cardano used to be able to say that it had never gone down, but there recently was a very short outage, like a month or
Wow.
2 ago.
Wow.
Yeah, it actually was a great example of showing why it being built the way that it was a pro because they were able to solve the problem with no real issues.
Hmm.
And so it's like basically saying if something was actually serious here, we still would have been able to avoid it. But they can no longer say that. They used to say that
That's
all the
funny.
time.
That's funny.
Yeah.
So the truth is now, Ben, the truth is that all of them will at some point
Mm,
because
yes.
of the nature of and this is my whole thesis on all of blockchain is that you need to have because when Ethereum is being used at that scale, it's going to be dealing with different kinds of pressures. And the engineers and the developers are going to have to deal with different types of threats and
Mhm.
things that they haven't built the chain to do yet. It's just going to happen.
Totally.
So, with that being said, there's always going to be a need to have a different layer where the
Mhm.
actual settlement of transactions are happening. So and maybe not where the settlement is happening, but where the transactions can be organized. Right. I need to do this off chain, brothers and sisters. I'm really sorry, but it has to happen off chain because there's always going to be the threat that the chain actually goes down. And we're talking about mission critical opportunities. We're talking about money that has to move from one place to another. I cannot rely on some third party to make sure that that's going to happen. I have to have a system that makes sure that it will happen no matter what. And this is why interoperability and any solutions that sit on top of blockchains are so, so important. Don't sleep on that. But anyways, yeah.
It's crazy to think about how obvious I personally think a lot of these things will look in like maybe let's say even 5 years time, right? Like I'll zoom out even longer than I actually think, where it'll look back and people like, when there's so much noise and fear going on, people can't really understand shifts that are taking place, right? And you've brought up that recurring principle that you brought up over the last 30 seconds, maybe a dozen plus times on this show, right? And it's crazy how a lot of people still don't really get what you're saying after hearing it this many times. It just goes to show you how many times you can get lost in a headline and miss what's actually happening, which is really what we're trying to talk about on this. And I think this episode in particular is a really great episode to do that. And someone here has a really good comment here, Johannes Winter. So someone said that in the new financial system, ETH is the platform, XRP is the pipelines, and BTC is the digital gold. Is that a fair description? I don't think that's bad.
Yeah, I think that's a really beautiful way of looking at things. Um, because there is a certain value. And so Ethereum, another thing about Ethereum being used as the fundamental layer for a lot of the stuff that these institutions have built out is that there's this thing called the Ethereum virtual machine as well.
Mhm.
And almost all smart contracts, almost all of them are built using the Ethereum virtual machine or some version of Solidity as the code, right? To implement the actual logic that's needed to create these smart contracts. Now, that doesn't mean that you have to use Ethereum, right? But it just when the whole industry standard, this is like the NVIDIA thing. Like when the language that's being used to code the hardware of those chips is CUDA or whatever it's called for NVIDIA, like it doesn't mean that you have to use NVIDIA's chips, but it just means that they have a certain grip over the industry.
Totally.
Um, Google and their what's the Google Chrome platform called again? I've just recently on the show had learned about that. Um, Point being, you've got these open source technologies, and the Legos of how it all comes together will continue to develop. But when you've got a critical piece like the actual language that's being used or the virtual machine that can sit on top of any blockchain and be used to execute on, that thesis that you talked about, I think is very interesting. You use Ethereum for the actual development of the smart contracts themselves. You might have some of the transactions being settled on the XRP ledger, and then the gold that's in the background is always there as a way that you can store value in this entire digital space without having to use it to settle trillions and quadrillions of dollars of securities transactions. I'm sorry,
No,
Bitcoiners. I'm sorry.
no. That's great. That's great. And that's foundational knowledge that's really important to understand. And speaking on Ethereum, so I actually have a lot of experience with the Ethereum blockchain because most of the NFTs that I've traded have been with Ethereum. And when things were going crazy with the NFT mania, the gas fees on that thing were just absurd. Like I was spending hundreds of dollars to make a transaction for something that was like the same price as the gas fees, which was a crazy thing. And that's also why layer twos became a massive thing for Ethereum. Can you explain what like a layer two is?
Yeah, I mean, there's different approaches to how you do a layer two, but you can kind of think of it as so you have layer one being the blockchain itself, and then you have these like mini blockchains or mini systems that are used to accumulate transactions in one place before you actually send all of those transactions into one larger transaction on the blockchain. It's kind of how you can look at a layer two. Um, there's different approaches. There's roll ups. There's that's usually the main thing that's being used, which is that concept of like rolling transactions up into larger
Totally.
chunks of a
Yes,
transaction.
absolutely. And that was a big deal because of the gas fees that I was referring to, where it would be
Mhm.
really slow and very expensive. And so they try to take some of the pressure off of the primary layer one by these layer two solutions. But now Ethereum, because it does evolve, right? People forget that these things aren't set in stone. They're code, they can be improved. And now the gas fees have come down pretty dramatically. Like I heard someone doing a transaction the other day for like literally pennies. And so that
Mhm.
changes the equation too, because a lot of people had made pretty foundational bets on the necessity for layer twos being like the primary driver.
Yeah. Yeah.
Go ahead.
I think that's a silly. I mean, let me just say it this way. Yeah. Like that's a tough bet because, first off, do you need a layer two when you can always update the chain? And then which layer two? You know what I mean? Like
Yeah.
you're really getting into the weeds of trying to pick a winner
Yeah.
inside of a winner inside of a winner. And it's like, brother. Like,
So many things that can go wrong,
yeah.
right? You don't
Yeah.
have any sort of foundational control over any of that. But it's important to explain all this stuff because these are all what goes into why Ethereum has kind of been selected by a lot of these legacy people to build upon. And what do you think? Where do you think makes sense to go continue down? Should we go down more Mr. Beast, or should you start talking about the tokenization stuff?
I'll talk a little bit more about tokenization and like some of the efforts that some of these companies have done in the past so far.
Sounds good.
So, BlackRock launched the USD Institutional Digital Liquidity Fund called the BIDL Fund. And this is a tokenized money market product backed by US Treasuries and cash instruments. Now, this is kind of something that's happening more in the background as these institutions are building in their own silos and like testing stuff across their own networks with each other. Some of this stuff you can see public transactions for. This one in particular, I believe, has billions of dollars in assets under management. I think this is actually launched on several different chains: Ethereum, Polygon, Arbitrum, and maybe some other ones as well. um, Another thing that I see here in my notes is like the custody and the audit of this fund is including some major firms like BNY Mellon. Okay, it has a hand in a lot of this stuff. I'll touch on some of that later, and then you have PricewaterhouseCoopers. And the only reason I'm mentioning that is because these are some of the most powerful and important institutions in the world, and they're involved heavily in all of this. The second big one is we had JP Morgan Chase with the tokenized money market fund. Um, which is just an institutional money market fund that they tokenized. Um, you've got Franklin Templeton that has some on chain mutual funds. Um, let's see. And then now we know about what the New York Stock Exchange is trying to do. But in general, you see a lot of the larger banks at the very minimum playing around with this technology, and a lot of it's being done on Ethereum. Uh,
Totally.
the other thing that I'll point out is because we're talking tokenization, we've got tokenized securities. Okay. And that's one major thing that's happening. And securities are essentially your stocks and your bonds. You have different forms of securities. You have options. They're technically securities as well. And securities are just, financial instruments that are meant to represent either a debt or an equity that you have ownership in. And there's legal definitions of securities that are important to use when you're defining, you know, people issuing securities is another important thing. And there's also this is a little bit nerdy, but in law, in US law, you have two different considerations when it comes to securities. Is the instrument being bought and sold a security? And is the transaction in which these things are whatever's being traded is being traded, or is that transaction a securities transaction? And the reason that matters is because, well, you saw it with Ripple. Like this was the exact thing that they went to court to figure out, which is kind of crazy to think about. Like this is the foundational piece of securities law is the difference between a transaction versus an asset.
Mm.
And so um, and this is what they figured out, right? So the Ripple XRP, excuse me, the XRP token is a commodity, right? But the transactions where they sold XRP to institutions in the way that they did, that was a securities transaction because there was an investment. There's laws around how you are able to sell assets, and that's why. And it's deeper than what I could tell you off the top of my head. So, anyways, just want to put that out. Sorry for that.
No, don't ever apologize, man. Go for those all the time. Usually the best stuff, so don't stress. I wanted to shout out this comment from the chat before we continue on. Keith, I've been listening to you for 3 months and feel way more well-rounded from the financial point of view. Ben, been watching this podcast for 3 weeks now, and the two of you are rock stars. Please keep it up. Appreciate you tremendously. Keith is an absolute legend. Keep showing him support on his channel, and we
Thanks,
appreciate
guys.
having you guys here. And then, can someone tell me how Mr. Beast is likable? That's what I was laughing at when yeah, I'm sure he's probably a good guy. I don't know. He does a lot of good things, but they're always like for views. So it's comes down to like a viewpoint kind of thing, right? Of course, there's a net positive. Go ahead.
Yeah, I don't know if he's likable. I think his content is watchable.
Yeah, I think that's the perfect way to explain it. I think if he had a podcast, I think the viewership would be
Oh, yeah.
horrible,
Yeah.
right? It would probably start off crazy and then,
Yeah. Yeah, like, he's able to talk YouTube. People will
yes.
listen to him talk YouTube.
But you can only talk about that so much to so many people.
Yeah.
Right? Like, there's not that much of
Yeah.
an audience for it. The reason why it works is because he only goes on podcasts every so often. And I had a point written down here because I think you guys are all like on the money, right? In terms of like who he is, the influence that he has, who he is compared to other more famous figures that like we all would like and look up to and we all agree that we love. But when it comes to just getting people to do something, they just need to know something exists. And I
Mhm,
don't know if
mhm,
there's been a better person in history to get something silly in someone's hands,
mhm, mhm.
right? And so with this, right, whatever I guarantee you, for you to throw this much money at him, they've got that thing planned at the
Oh, yeah.
very least, if it's
Facts.
not already built.
Also, for him to accept the money, that's the thing that I'm the most surprised by.
Why is that?
Because why like, he doesn't first off, he could raise money from anyone, right? He could raise money from any private equity company in the world. I'm sure he has some other private equity backers, and he could
Probably.
raise billions and billions of dollars. So
Yeah.
why in that position with any startup, right? Like, why are you taking money from Bitmine,
Yeah.
right? That means there's a grand plan, brother. No
To
doubt.
100%. I love that way of thinking. That's awesome because you always got to think that it's always deeper. It literally always is. And typically, people who are rigging the game, they don't lose. And so, if you look at everything that's involved and everyone who's building here, I'm just really hard pressed to believe that ETH doesn't go crazy. I think what's happening, like, it's insane. I really think that the price is so dramatically underpriced. It's not financial advice, but just think about the things that are being built, right? When there wasn't even 1/100th of these things happening last cycle when the price was higher, right? Like the speculation last cycle was that this might happen. It's happening and the price is lower? Like that just makes no sense to me. I get that we're all poor, but I just think that it's going to look back and be so obvious. And so I also tweeted this last night where when this kind of foundational shift happens, the example that Keith gave us with the whole car thing and how that changed the whole global economy, but especially the anchor around oil. What are adjacent things that are going to benefit from this very likely to happen change, right?
Hey, you made it to the end of the clip. That means you're probably enjoying this. And if so, just know that you can catch us live every Tuesday and Thursday at 12 p.m. Eastern. And if you want to see the full version of this episode, you can click the link in the description down below. Otherwise, YouTube thinks that you will enjoy this next.